You play in helping Ireland to get out of its economic difficulties? Well, there are a number of ways, and I suppose the starkest figure I can give you is, okay, one of the big problems that we face, we've had incredible, dreadful problems in our banking sector, and that's been across Europe and across the world, but it's been particularly damaging to the Irish economy, and we know that the government have various plans in place to address that, particularly related to the property boom and high lending, that type of thing. And the immediate problem that was faced by the banking system or the Irish economy was the lack of liquidity. And there's been various measures nationally to try and deal with that. But we understand, in terms of just keeping the Irish banking system afloat, the European Central Bank, and we're with them because we're in the euro, we're part of the eurozone, which is managed by the European Central Bank. The European Central Bank is pumping in massive emergency financial support into the economy, into the banking system. It's in the order of 130 billion euros. That is a phenomenal figure. If you put that against the size of our economy, that's about 77% of Irish GDP is now being supported through this emergency assistance. The other ways it's helping is that clearly the government now has to get its house in order in terms of the legislation for NAMA to try and get the banks onto stable footing so we can get a better base banking system. And there has been a lot of money put in to bail out the banks. That normally would be contrary to state aid rules, and state aid rules are adjudicated by the European Commission because we're part of the single market and we have to have a level playing field. The Commission has acted very, very quickly to give positive decisions to allow the Irish government to put out that money to bail out the banks and to give those banks the sort of the breathing space to start to rebuild their reserves and start to rebuild confidence, much needed confidence that the Irish people now don't have it in those banks, and that's so. The third way is that the EU and all the member states in December agreed a stimulus package, because the other thing is we need to get money into the economy to keep business going, to keep people in work. Again, it was the European Commission through President Barroso that got the member states together to agree that there would be a package at the national level, and that would be backed up by a package at the European Union level. And finally, in a very practical example, one of the consequences of the severe economic downturn here was not many miles from here in Limerick, where Dell announced earlier this year a sizable number of job losses and a relocation of part of its production elsewhere. And one of the problems there is that it's difficult for those workers who are being made redundant to find new jobs with their particular set of skills. So there is a European fund, it's the European Globalisation Fund, which is there for that very purpose, to help workers who are affected by globalisation. And that's part of it. Dell made an economic decision that their costs were too high in Limerick and they can move somewhere else to get lower costs, wage costs and other costs. An application has just gone in last month from the government here to that Globalisation Fund, and the Commission already has given a positive signal to the government and to the workers and I will make a recommendation within a matter of weeks that those workers are eligible for funding to help them to get retraining, to get new skills, to get them onto the job market, and really up their skills level so that they're a better place to get jobs when we get an upturn in the economy. So there are a number of ways in which the EU is very active behind the scenes.